The week ahead. I'm going to start by taking a brief look at the daily bar. When you look at the daily bar, you will see that the market has a tight two-day balance. You've heard us many times talk about the balance trading guidelines. We're going to review those guidelines again when we go to the profiles. What I want to say before we go to the profiles is historically, I will tell you that I do not have a bias, or at least recently I said I do not have a bias in the market. That has changed as we look at today. I do have a bias today, and I will share that bias with you. We talked about the two-day balance when we looked at the daily bar chart. Now we're talking about the two-day balance when we look at the profiles. But I want to put a little more context behind it. You had a sharp break to the downside earlier in the week. Then on Wednesday, you had a rebound late in the session with some follow-through on Thursday. I believe that rebound was short covering. And what I mean by short covering, I mean it was old business, but that old business wasn't accompanied with new money buying, at least in my opinion. Now, on Thursday, you got some carry through to the upside, just momentum, price-based carry through to the upside. You did not get any follow through on Friday. You got an inside day. Well, it's a tick or so from being an inside day. But basically what you have is a two-day balance. The point I want to make, and the reason I have a bias today, is that I believe that Wednesday, late Wednesday, was a short covering rally, followed by additional short covering and a little bit of new money buying on Thursday. No follow through on Friday strongly suggests to me that mostly what we saw was short covering. Short covering can weaken a market because it removes potential buying power from the market. Had it been more than short covering, I think you would have seen some upside follow through on Friday. I went home straddled because I've been trading volatility, but I have a downside bias to the market. And I may be wrong, but I'm just telling you that so you understand where I'm coming from and why. Now, how will I manage that bias? If I am correct, the market will break to the downside relative to the two-day balance. If I am incorrect, the market will fail to carry through to the downside and will go back up and trade above the two-day balance. But right now, I've exposed my bias. But the basic rule is balance trading guidelines. Go with a breakout from balance, fade a breakout from balance that fails. So in other words, if the market breaks to the downside or the upside, go with it. If the market breaks to the downside and fails and re-enters that two-day balance, there's a good chance that you're going to get additional short covering and maybe some new money buying. If the market looks above the high and then comes back in, then there's a good chance that the market will rotate back down towards the lower end of the two-day balance. But for right now, the two-day balance guidelines are in effect. Thank you. Have a great trading week.